If you make more than six figures, there are hundreds of ways to do your taxes. But here's the thing, most people at every income level are paying more tax than they should. Not because they missed one big secret, because they're stuck at level 1 of a 5-level tax optimization strategy that they don't even know about. So in this video, I'll walk you through the 5 levels of tax optimization that anyone can follow to reduce your taxes to 15% a year. These are the exact moves that took me from paying closer to 30% to paying about 15% on the multi-six-figure income, and that I've been doing for my clients for the past 8 years as their CPA. And in each level, I'll flag who it applies to and explain how you can do this yourself. Level 1, know your numbers. Now this applies to everyone. Boring and obvious. Also, non-negotiable. And yet most six-figure earners don't actually have this locked in, which is exactly why they're stuck at level 1 and can't climb or are taking excessive risks. You can't run tax strategy on numbers you don't actually know. If you don't know how much you're making and you don't know how much to save for taxes, you don't know what strategies fit your income level. You don't even know how much you should reasonably be spending on personal expenses. You might think you're making way more and way overinflate your lifestyle. For W-2 earners, this is easy. Your pay stub tells you. Your goal at level 1 is knowing your gross, your net, how much you have being withheld from your paycheck, and whether you're on track to owe a refund. For W-2, that takes like 15 minutes a quarter. For business owners, this is bookkeeping. Real, professional, ongoing books. Not a spreadsheet you touch once a quarter. Not your spouse or uncle doing you a favor. All of the truly wealthy people I know have professional accountants doing their books on a regular basis. Not because they can't do it themselves, because they know fresh, accurate books are the foundation every other tax move stands on. Save a few thousand a year by having an amateur do your books, and you'll lose 10 times that in strategy you can't execute because you don't have real, accurate numbers. And if you don't have level 1 locked, nothing above it really works. And the next level also applies to everyone. Level 2, fill the free buckets. The tax code has a stack of accounts specifically designed to shield income from tax. Most people don't fill them, and they don't cost anything extra to use. They just require you to route money you were already saving into the right container. Here's the main ones. HSA under section 223. If you have a high deductible health plan, which is like a deductible maybe around $3K, this is the best account in the tax code. Triple tax advantage. Deductible going in, growth is tax-free, and qualified withdrawals are tax-free as well. Max it out every year. Now, if you're self-employed, a solo 401k or a simplified employer pension under section 408k is your version of doing this. Next is the traditional or Roth IRA. Even at income levels where the traditional deduction phases out, a backdoor Roth still works for high earners. Now here's real numbers to make this concrete. Say I made $300K last year and I want to save some for retirement. I throw $70K into a solo 401k and I get about $28,000 back in tax savings. 40% instant return on a contribution I was gonna save anyway. Just don't make a dumb investment and trade a dollar for 40 cents. The whole point of level 2 is that these are moves you were gonna make anyway. Money you were gonna save or spend on healthcare routed through the right container. It comes back to you as tax savings. The rule of thumb is if the investment only exists to chase the deduction, you didn't save on tax, you bought a loss. And W-2 earners can hit level 2 completely. If you're maxing your HSA, hitting your 401k match, and contributing to a Roth IRA or backdoor Roth, you have level 2 fully locked. That alone puts you ahead of 90% of your peers. But if you're a business owner, level 2 is the floor, not the ceiling, because level 3 is where the leverage actually starts. Quick pause. I know I'm going through a lot of this quickly, but there's a lot of tax traps you have to be aware of, especially once you start climbing past level 2. I put together the 5 that I see most people fall into. If you click the first link in the description below, I'll send that list directly over to you. Once you become aware of these, you will not forget them, and this could save you thousands and thousands of dollars a year. So go check that out. First link in the description, entirely free. Now into the business owner levels. Level 3, match your entity to your income. This applies to self-employed earners, roughly 100K net and up. If you're W-2 only, you can skip this level, but if you have any self-employment income at this level or higher, choosing your entity structure and how you pay yourself out of it is one of the most impactful decisions affecting your overall tax rate. Most level 3 conversations center around the S corporation. If you're operating as a sole proprietor, single member LLC, and you're netting 6 figures, you're paying 15.3% self-employment tax on every dollar of profit. An S corp election lets you split your income into reasonable W-2 salary plus distributions. The salary portion still gets payroll tax, but the distribution portion doesn't. Done right, that alone saves multi-4 figures to low 5 figures a year at this income level. But here's what most owners get wrong. They pick a salary number their prior CPA gave them and never touch it again. Owner's pay is a lever, not a set it and forget it number. Too high, and you're paying too much in payroll tax. Too low, and you're either flagging yourself for reasonable comp scrutiny with the IRS, like they use factors from Revenue Ruling 74-44, or you're accidentally choking off your Section 199A QBI deduction. I talk about this a lot. You could also be capping your retirement contribution limits from too low a payroll. That's not just strategy, it's also compliance, and it's what separates level 3 done poorly from level 3 done well. Now, some of you might have all 3 levels locked in already, but if you're a high earner or aiming for generational wealth, the next 2 are your secret to success. Level 4, manage the year, not the return. This applies to business owners running an S Corp, mid 6 figures and up. This is where most business owners have the biggest single leak, because level 4 isn't a January meeting or an April deadline, it's a 12-month rhythm. 3 moves inside level 4. 1, ongoing projections. Income expectations change. If you set a strategy in January assuming 300K of income, and by mid-year you're pacing 200K or 400K, in both cases, you're paying too much tax if you don't adjust. Real tax planning is a running conversation every quarter that updates your projection, your withholding, and your strategy based on where the year is actually going. If your CPA hasn't run a projection since your last return was filed, ask them why. Payroll withholding as a lever. Yes, you can and probably should make quarterly estimates, but you can also just add to your withholdings through payroll, which is far more responsive and far less painful than writing a 5-figure check every 3 months. Then, end of year deduction maxing. I love this one. All my team, my contractors, and my vendors love me around Christmas because I pay bonuses. And I asked them if I could prepay next year's services. Because here's the logic. A deduction in December gives you tax savings in April. A deduction in January gives you tax savings a year from April. If I'm going to pay these expenses anyway, and I'm growing the business, give me the deduction now. These are your concrete year-end moves. Prepay software subscriptions if the vendor will invoice you now. Pay Q4 contractor bonuses in December instead of January. Purchase business assets you actually need before December 31st for Section 168K bonus depreciation. Buy real estate that actually cash flows, mindful of Section 469 passive activity rules. And one warning, don't spend all the cash you need to run the business next quarter, of course. And don't throw it on a credit card and over-distribute your S-Corp basis. Over-distributing basis under Section 1366 creates a taxable event that erases the deduction you just took. If you don't know what that means, that's a separate video, but DM me, happy to talk about it. Now, is this aggressive? Yes, a little bit, but is it reckless? No. And anyone can get to level 4. But level 5 is where most people fail. Level 5, master your personal tax edge. This applies to high earners, roughly mid 6 figures and up. Nobody talks about level 5. It's where I saved myself tens of thousands of dollars last year alone. Level 5 is knowing the specific rules of your industry, your filing status, your phase-outs, and the personal circumstances that turn a generic strategy into a targeted strategy. Here's my own story to make this concrete. I run a CPA firm. Under Section 199A(d)(2), that's a specified service trade or business, an SSTB. Consultants, architects, doctors, attorneys, accountants, all qualify. And I knew this, and I realized my income was just above the QBI deduction phase-out limit for SSTBs, which meant I would lose the entire QBI deduction, multi-5 figures gone. So, what did I do? Supermax my year-end deduction. Deferred receiving payment on same year-end invoices to push income into the next year. I chose traditional retirement contributions over backdoor Roth to lower my AGI now, and I kept my W-2 salary as low as reasonable to reduce the taxable income, pushing me over the phase-out. And the result, I got back under the SSTB phase-out threshold and preserved the full QBI deduction, a multi-5-figure deduction. And if I hadn't known I was an SSTB, I wouldn't have accelerated expenses that aggressively, and I would have paid nearly 5 figures more in tax on that alone. That's level 5, and it's completely different for every viewer. SSTBs need to know their SSTBs. E-com companies need to know how they're accounting for inventory. Construction companies need to know cash versus accrual, Section 460 long-term contract rules. Real estate investors need to know material participation, real estate professional status, and passive activity grouping. Doctors need to know if they qualify for the QBI deduction at all. W-2 earners at high income need to know phase-outs on their credits and deductions. Every industry, every filing status, and every income tier has rules that don't apply to anyone else. Level 5 is knowing yours inside and out. Or, at a minimum, it means working with someone who is managing all of it for you. Those are the 5 levels. Level 1, know your numbers. Level 2, fill the free buckets. Level 3, match your entity to your income. Level 4, manage the year, not the return. Level 5, master your personal tax edge. For me, doing all 5 well and properly is the difference between paying 15% and paying closer to 30% on multi-6-figure net income. That's a $30,000 difference in my own tax bill. For clients at the same income level, that's the average. It's much more at 7 figures. So be honest with yourself, what level are you on? And if you need help figuring out where you are and building a plan to climb, book a call. Links in the description.